welcome to the World Battery Metals and Mining News for the 5th of August 2024. Endeavour's ex-CEO paid miner $1.35 million settlement after firing Endeavour Mining plc's former CEO, Sebastian de Montesis, paid back $1.35 million a settlement post-termination for alleged serious misconduct, after the gold mining firm identified questionable payments totaling over $20 million to a shady UAE entity. Despite his denial of personal gain, the probe couldn't unearth the ultimate beneficiaries or quantify his direct profit from a related $500,000 investment agreement. Though de Montesis boosted Endeavour's profile during his tenure, the aftermath of his fiscal escapades has left a bitter taste. The company is now clawing back millions more to cleanse its finances, reminiscent of a gold nugget shined up only to reveal pyrite within. Glencore to pay $152 million fine in bribery case. Glencore plc has been slapped with a $152 million fine by Swiss authorities for failing to prevent a partner from bribing a Congolese official back in 2011. The Swiss Attorney General's office found that Glencore didn't do enough to stop the shady dealings tied to acquiring stakes in Congolese mining companies. Despite not admitting to any findings, Glencore opted not to appeal to clear the decks. They proudly pushed out a statement saying this wraps up all past misconduct probes, which primarily sounds like closing an unpleasant chapter. It's worth noting, though, that the OAG didn't find any Glencore employees directly involved or profiting from the dubious activities. This wraps up a scandalous saga where Glencore has shelled out at least $1.7 billion globally to atone for its bribery sins, after already dealing with corruption cases in the US and UK. While such fines seem hefty, let's be honest, Glencore's operations worldwide aren't exactly angelic, and paying bribes appears to have been just another line item on their balance sheet. Agnico, Barrick dominate top Canadian miners. Agnico Eagle Mines, king of Canadian miners with a monstrous market value topping $51.4 billion, flaunts impressive gold operations at Detour Lake and Canadian Malartic. For first quarter net income, the company's disciplined cost control and record gold prices brought in a cool $347.2 million. CEO Ammar Al-Jundi's vow to channel gains to shareholders paints a picture of shareholder-first capitalism. Agnico's ambitious underground expansion at Detour Lake, aiming for 1 million ounces annual output, shows they're not just sitting pretty. Meanwhile, Barrick Gold struggles with a meddling Malian junta while boosting output across its far-flung mines. Wheaton Precious Metals hums along with a stable streaming model, while Nutrien's quest for fertilizer dominance might as well be a fertilizer for investor confidence. Teck Resources' pivot to copper, post-coal divestiture, signals a cleaner, greener future, despite coal's cash allure. Cameco rides a uranium wave, and Ivanhoe Mines ramps up African copper and zinc activities, with U.S.-backed infrastructure plans. All these maneuvers suggest the Canadian giants are shrewdly positioning in the ever-volatile mineral market. EnergyX makes $150 million bid for Galan Lithium's Argentina assets. EnergyX has made a bold $150 million bid for Galan Lithium's assets in Argentina as part of their strategy to consolidate lithium-producing acreage amidst currently low market prices. The offer encompasses $50 million in cash, another $50 million in EnergyX shares, and an additional $50 million for project financing. This move is quite shrewd given the recent drop in lithium prices that has even industry giant Albemarle scrambling with layoffs. EnergyX's CEO Teague Egan is confident that lithium demand will surge later this decade, making the timing of this acquisition potentially brilliant. This bid follows EnergyX's previous attempt to crack the lithium market in Bolivia and their ongoing pilot project in Chile. Galan, on the other hand, appears to be playing hard to get, awaiting further engagement from EnergyX. Interesting times ahead for both players as they navigate the ebb and flow of lithium market dynamics and emerging technologies. Vedanta plans debt refinance to cut funding costs after upgrade. Vedanta Resources, under the helm of billionaire Anil Agarwal, is navigating its way through a mountain of debt by seeking to refinance a hefty $3 billion of high-yield bonds due between 2026 and 2028. The company, which recently restructured these bonds to extend repayment time, has benefited from an uplift in its credit rating by S&P Global Ratings, now comfortably at B. If you're wondering why this matters, well, a higher credit rating often translates to lower borrowing costs, something Vedanta is hoping to capitalize on by slashing the interest on its bonds by up to 400 basis points. The company isn't just dabbling in zinc or steel, but is also dipping its toes into oil, making its slow revival tied to the swings of the commodity market. With aims to cut $3 billion in debt by 2028, this could sideline some risks for bondholders and perk up credit quality. If anything, this initiative could be seen as a strategic move to sand off those hefty double-digit yields on their dollar debt. While promises of financial prudence sound lovely, let's wait and watch if they manage to walk this tightrope without slipping. Iron ore price hits two-week high on improved Chinese economic outlook. Iron ore futures have reached a two-week high, spurred by China's rosier economic outlook and ongoing stimulus plans. Notably, September contracts surged on both the Dalian Commodity Exchange and Singapore Exchange, driven by robust services data indicating 19 consecutive months of expansion. China's State Council has introduced measures to bolster service consumption, such as tax deductions and credit support, indicating a governmental push to stimulate domestic demand. This optimism extended to steel markets, with gains observed in wire rod, hot-rolled coil, rebar, and stainless steel prices. Even steelmaking inputs like coking coal and coke saw modest upticks. Despite the cheerleading from financial analysts, one must wonder if these policies are more about appeasing international markets than long-term economic planning. But hey, they're trying. Aurubis slides after Q3 earnings miss. Aurubis, Europe's copper behemoth, saw its shares nosedive by 8.8% after its third-quarter earnings missed the mark. The company's EBT soared to €90 million, thanks to recovering from last year's metal theft fiasco, but still fell short of the €99 million analysts had optimistically forecasted. If we rewind 2 years, earnings are actually down 13%, showing a less rosy picture. Their smelting and products business echoed the same 13% decline, with revenues dipping 7% against 2021-22 benchmarks. Despite a global dip in copper prices and weak economic signals from the US and China, Aurubis managed its highest-ever quarter amid a planned shutdown in Hamburg. Alas, analysts are now side-eyeing their year's EBT forecast of €467 million with skepticism, with ongoing projects and costs in the U.S. adding to the uncertainty. Let's be honest, missing expectations with sky-high copper prices isn't a great look, but Aurubis remains bullish on its full-year guidance, backed by its best-ever quarterly results amid challenging conditions. Gold price falls over 1% as wider market crash spills over. Gold prices plummeted over 1% on Monday amidst a widespread market sell-off, propelled by escalating economic anxieties. Spot gold suffered its steepest drop since June, falling 3.2% 1 point before halving the loss. Despite maintaining above $2,400, U.S. gold futures were also down. The precious metal had an impressive run so far this year, with prices peaking above $2,500 for the first time, buoyed by central bank purchases and Asian demand. However, Monday's downturn was driven by margin calls in the wake of an equity market plunge, sparked by weak U.S. economic data, hinting at a recession. Analysts, however, remain hopeful that ongoing geopolitical tensions, economic uncertainties, and potential interest rate cuts will soon revive gold's appeal as a safe haven. Funny how the so-called safe haven, gold isn't immune to a good old-fashioned stock market rout, eh?